So Adam, how do you see the evolution of Bitcoin and the Bitcoin Treasury Company model, and how do you have a valuation framework for the different bridges of Bitcoin Treasury Company, and how do you analyze them? You have even created new metrics. How do you analyze the Bitcoin Treasury Company business model?
Well, it's interesting to see how people are looking at it, because as with many new things, the default is people are skeptical. Why does that work? Seems like magical thinking, seems recursive logic, that kind of feel. But it's quite simple, really. You can recreate the logic yourself. Which, to go back to Michael's dentist example, let's say it's a private practice. They could use their free cash flow to buy Bitcoin, but they realize they can take a loan and borrow Bitcoin because they have now accounts. They can maybe borrow $1 million against the practice, which has some enterprise value, and buy Bitcoin. And the dentist is a friend of yours, so he invites you to buy 10% ownership in his practice. But he knows that you can't get this favorable business loan because you're not a business. So he asks for a premium. When you do the calculation, you realize it's still a good deal, because if you want to do it yourself, your credit is less scalable. You have a worse credit risk as an unskilled lender, and so it makes sense. So you invest in it. So now you've proven to yourself that Treasury Company should have a premium.